Almost a 200-point decline on the Nifty, a large contribution on the downside also coming in from Infosys and Reliance. But, you know, HUL is the other one which is closer to the lower end of today's trading session. Yesterday, I caught up with Rohit Jawa, the MD and CEO of HUL, and Ritesh Tiwari, the CFO of the company. I remember for Rohit Jawa, this is the first time that he's been addressing the media. So important to find out the long-term strategy, and that's exactly what I asked them going forward. Let's hear that conversation out.
From the 600 BPS of margin dilution and gross margin, in last 3 quarters, we built back 400 BPS, including 140 BPS in this quarter. A large portion of that, 300 BPS has got invested back in A&P. Our A&P, which was more like 7% 3 quarters ago, and this quarter, as we reported results, is roughly 10%. So hence a large portion has gone back into investing. Overall intensity of competition and also media intensity in the market has gone up. Media investments, if I look at both GRP, also the new age media put together, we're almost back to 2019 levels now. And hence, if I look forward, it's a very similar, in our view, the focus will be to keep driving gross margin improvement and investing behind A&P as you see further amount of dial-up on competition incentives.
So what happens to the EBITDA margin?
Yeah. So this is a time where the line of the margin which is most important is gross margin, because we have to generate fuel to ensure that there's enough amount of investment for driving innovation, for driving overall market development, and hence we are at this point in time squarely focused on driving gross margin. Where we are with the margins today, this quarter you've seen we declared 23.6% margin. It's a pretty healthy margin where we are. Hence focus will be to drive competitive volume growth, sustainable volume growth momentum, and keep investing behind A&P fueled by gross margin. That will be the focus for us from a P&L management perspective.
As far as the company is concerned, I've been now meeting consumers, customers, I've been around the category teams, I've spoken to functions, I've been to one factory or two, so I have a pretty good sense of the business. And I must say, having come back, I feel very, very proud of what's happened, and the business is in a great shape. It's a great business, very, very strong positions when it comes to market leadership positions of our brands. I see very strong, to your point of process, very, very rigorous processes. Our talent, depth, and quality is absolutely first class. So if you look at the 2 or 3 fundamentals of driving our portfolio through market development, premiumizing it, driving our brands through purpose and innovation, winning in channels of the future like e-commerce and eB2B, and essentially building distinctive capabilities like winning in many Indias, our Symphony cost program, and our talent. I think I'm very excited with all of that which I inherit. And my intention now going forward is to take this to the next level. And the market in India, as I mentioned, is changing constantly. So our strategy will evolve, building from our strengths that I've just mentioned. And we will, of course, account for the changes. So whether it's deepening our premiumization effort, or getting further in our Reimagine HUL digitization program, or in fact bringing sustainability even further into the heart of the business while maintaining our core brands, our reach, our distribution strength, those moats. That's really how I see the business going forward.
Is there anything personal which is, of specific interest to you? Any category, any area, any form, function in Hindustan Unilever that, or from your experience at Unilever, that you would like to bring to Hindustan Unilever?
So I was here 15 years, and my first day in Unilever was in the market, selling. So that's always been close to my heart. And when it comes to the last 2 decades, of which last decade is spent in countries like China and Philippines that have been through their own evolutions, and particularly China that's seen this massive growth in digitization and premiumization. And in a sense, that is a sort of forebearer of the future. It's not going to be exactly the same pattern and trends, but I see India would follow a similar trajectory, in fact, maybe even faster, given the India tech stack and the hardware and software infrastructure that's being built. So I would see bringing the kind of future that I've already seen in other parts of the world to India would be something very personal, because you don't need to learn the same lesson twice. And I think with the India centricity to it would be something that would be how I'll bring more and more of that color into the business in our discussions.
Ritesh, specifically on competitive intensity, I wanted your thoughts, because you said that as inflation comes down, all the smaller players come back as well. I remember some of your previous presentations where you had gained market share in 90% of your categories. Now that numbers come down to around 70-75% You also said in your opening remarks that industry-wise volume growth was mid-single digits, whereas underlying volume growth for Hindustan Unilever this quarter has been 3%. Just some more color on competitive intensity.
Now, if I just bring back competitiveness, as I mentioned that overall where market has moved, we have grown on a base of 6% volume growth last year. We grow further 3% volume. More than 75% of the business is winning market share, value and volume market share. Are there pockets where we see stress this point in time? Answer is yes. We do see in mass segment in certain regions dip in certain parts of the portfolio, but that's business.
What
we know that.
categories?
Sorry?
What categories?
Yeah, as I mentioned, for reasons of competitiveness, I will not give much detail. But just let me mention, in few pockets in mass segment and in few regions, we have seen some dips in our market share. But such is business. You will always have some puts and take in the business. We have plans in place, which is why one of the points I mentioned earlier, maintaining the right price-value equation becomes extremely critical for us. And this is what has been our focus area, as I called it out. So overall, our market share performance, as I mentioned, if I look at 2-year period, substantial business growth ahead of the market growth, and which is why we've seen a good amount of market share gains over the last couple of years' time in the business.
Okay, that's on HUL, a very confident management there. But of course, the stock is under pressure after the disappointing numbers. But let's